Welcome back. Well, let's get to a couple of queries this afternoon. We have Rajat Bose, who's joining in on the technicals, Parthiv Shah, who's here to talk about the fundamentals. Rajat, as well as Parthiv, sorry to keep you waiting, but let's get to the first question. We have Prashant Kumar, who writes to us from Pune. He holds 15 shares of Maruti, which he's bought at around 4,000 rupees. He's a long-term investor and wants to know what to do with his position on Maruti. Well, Rajat, you're a big fan of a lot of these stocks which are held for a long time. What would you recommend?
See, if you look at the 200-day exponential moving average, it is slowly rising up. In this case, there are lots of stocks which have actually moved up pretty fast and pretty sharply. Of course, in the last 1 month, Maruti has done a good performance from around, say, 8,000 level to about 9,500. But I would suggest if he is a long-term investor, he should carry on. And unless it falls on a monthly basis below 7,600, the investors should not be worrying at all. Why I said monthly? Because I'm referring to the 200-day exponential moving average, which is currently around 7,599. I mean, at the moment it is 7,599. Unless that is taken out, there is no such cause for worry.
Okay, got that. Parthiv, what is your call on this one? Of course, buy price is 4,000. And also, we were speaking to the Maruti management earlier. They're talking about their SUV sales being extremely solid. But what we have seen in the data is that the passenger vehicle sales seem to have come off quite sharply, around 26% lower. How do you look at Maruti from these levels? Would you recommend holding on? And do you think, it's ripe for fresh investments as well?
Dr. Pavitra and Rajita. Basically, our sense is that Maruti is having a good problem. Why I use the word problem is because you rightly mentioned the entry-level sub-segment where they sell Alto, Espresso, even Baleno for that matter, Celerio, Desire. I think this segment is not doing well. And more importantly, I think the rural-centric focus that Maruti has is also the denting the volume growth in this particular category. But the good news is that the utility vehicle segment, where they have a lot of pipeline now, including Brezza, Ertiga, Fronx, Grand Vitara, Jimny, and S-Cross, XL6, all of these models are doing extremely well. And the order is pretty good. So basically, these are the models which get higher average selling price and also tends to help Maruti in increasing its margin share. So we are upbeat on Maruti for a long term plan, but overall, I think recently what has spooked the market is the talks of Maruti's acquisition from the parent Suzuki, the Gujarat joint venture, and probably the market is hoping that Maruti, having almost 8-10,000 crores of cash in its balance sheet, if that is put to use versus doing a share swap, I think that is what the market would be expecting. But nonetheless, the investors invested at 4,000 levels. Certainly hold on for longer term.
Okay, hold on to Maruti for a longer term, considering that the buy price is also very attractive. The next query comes in from Mitesh Parmar, who writes in from Rajkot. He has 500 shares of Hindalco, which he bought at 410 rupees a piece. So he is making a little bit of a profit there. He's a short-term investor and wants to know whether to hold or sell. Rajat, what is your call on Hindalco for the next, say, with just a few months in terms of a time horizon?
Well, Hindalco is actually rising pretty well. I mean, even if it corrects after, it doesn't really breach the 20-day exponential moving average on the downside. And mostly it bounces back from the 9-day moving average. But this time, probably for the first time, what I've seen is that both the Nifty, Bank Nifty are actually not just tasting, there is bearish crossover that is taking place in these indices. So chances are that you would see Hindalco would also fall. Maybe it will come down to something like 440, but it has a saucer pattern, and its rounded bottom pattern is a pretty regular pattern. Even if it were to come down, just like it did in the month of July and again started rising, I would suggest a hold unless 440 is decisively taken out. In that case, either book profits or get out, whatever the investor chooses to do.
Okay. What would the technicals look like on Hindalco? Yeah, Parthiv?
Ekta
Yeah.
gave a technical picture only.
Oh, sorry. What would the fundamentals look like? Sorry.
Fundamentals are looking intact, Ekta, because if you look at the Indian business, that is a debt-free business, which has been pretty resilient. They are one of the low-cost producers in aluminum and even in copper. Also, they have been doing extremely well. The last quarter showed one of the highest EBITDA margins out there as well. Novelis is recovering well. It's now a free cash flow generating business. And going ahead, they have very good organic expansion on track. They're going to deploy almost $3.3 billion in Novelis and around $1.13 billion in rest of the markets. So I think the application of aluminum is increasing day by day, and Hindalco is extremely well placed. The valuations are not very stretched. One can easily attribute a 6 times EV/EBITDA multiple, which gives a lot of upside from here. So we are upbeat on Hindalco, but yes, what Rajita said, with the market, the stock could correct, and that will become another good reason to acquire the stock.
Okay, got that. Let's get in our next query as well. We have Srinivas Reddy, who writes to us from Kerala. He holds 100 shares of ICICI Bank. This he bought at 920. He's a long-term investor and wants to know whether he should hold or sell at current levels. Parthiv, ICICI Bank good to hold?
Yes, absolutely, Pavitra. Looking at the recent results and especially the major turnaround that the bank has seen after Mr. Sanjay Bakshi, they're doing fantastically well, both on the liability franchise and on the asset side. And if you look continuously, they have been lowering their credit cost and the growth in terms of the disbursements is pretty high. The credit growth is upwards of the average what the RBI has been reporting. And more importantly, the way they have shaped their book for the long run, it is looking a very, very good and a clean book. The NIMs have been pretty strong. The operational profitability has been extremely resilient, and the provisioning coverage ratio is also very high. So it seems that the balance sheet is intact, and probably one is penciling that over the next 3 years, this is a bank which can easily grow its balance sheet anywhere between 15 to 18% compounded without any problems of any legacy asset issues. So I think we are very upbeat on ICICI Bank, and even till date, if you see the valuations, it is it has run up in terms of valuations as compared to HDFC Bank, but still it is at a 10% discount. So we are upbeat on ICICI Bank for the long term.
Okay, all right. Now, technically, Rajat, would you share that view on ICICI?
Long-term trend is up, medium-term trend is up, but then there is a serious correction that is happening. I just referred to the Bank Nifty. Bank Nifty actually showing a dead cross in the sense that the 9-day exponential moving average is breaching 20-day moving average from above, and both are the gradients of both the moving averages are down. In such situations, this time, for the first time in 3 months, we see this kind of a thing happening. If that is the case, then ICICI Bank may also come down. But if one is a long-term investor, then at least 875, that is the minimum stop loss for a long-term investor. But any short-term investor, I would say, if somebody is actually taking it as a trading position, in that case 950 should be the stop loss. But generally you can continue to hold, because the kind of prowess bulls have shown, maybe they will come back again.
Okay, that is both the technical as well as fundamental call on ICICI Bank. With that, Rajat, Parthiv, we're going to wind down on the show. But thank you, as always, for taking out the time and speaking to all of our viewers today about the various queries that they have sent in. We're going to wind down on this edition of Your Stocks with the news that the market has only gotten worse. It's 300 points gone on the Nifty, 1.5% lower there. The mid-cap index is down 2.2%, and the Nifty Bank seeing an 830-point cut. The advanced decline almost at 1:5 right now. We're going to wind down on this show, but stay tuned because closing bell comes up next for a very interesting last hour of trading.